China's economy relies heavily on lending for massive government-led projects, but with credit in the country being controlled by state-run banks, a shadow banking system has emerged. It's loosely regulated, and a US-based researcher says it could lead to a big problem.
Shadow banking could be fueling a subprime crisis in China, warns a senior researcher from the Bank of America Merrill Lynch Global Research. Shadow banking is a term used to describe the use of non-bank institutions that provide services similar to banks.
So now, the Chinese economy is becoming increasingly dependent on the local government, investment vehicles, as well as basically shadow banking, meaning that retail investors are buying into these structural investment vehicles to fund, risky, loans, in properties and in other sectors. So I think from that point of view, in many ways, these are China's potential subprime, basically crisis in the making.
Wu was speaking during the Bank of America Merrill Lynch 2013 conference called Year Ahead in New York last Tuesday. China's credit market is heavily dominated by state banks. They often favor extending credit to large state-run companies. That means for many private companies, they have to look elsewhere for loans. This shadow banking system is loosely regulated at best.
The biggest downside risk for many people, including myself, is that something might happen with the shadow banking system. Clearly, the shadow banking system has been responsible for a big part of the credit growth in the financing over the last basically year in particular. And I think, we've gotten to a point now that I think, people are starting to worry about the vulnerability of the whole system.
During the conference, panelists from Bank of America Merrill Lynch predict the global economy will pick up next year. China would play a part in that, but not in the way it did previously.
One of the issues for China is that when China was first embarking on its big export boom, it was a small country and it could kind of lean very heavily on that. But now China's a big player in the global markets and it can't grow the way it did in terms of exports. So the country needs to develop more balance.
The panel also said rising inflation in 2013 would be a problem for the Chinese economy, as well as for other developing countries.